So there's really no excuse to start off slow. And while you're starting off slow, develop your exit strategy. Just think to yourself, what is my setup going to look like? How many hours a week am I going to work? Am I semi-retiring? Is this something where I've already worked 20 years and I'm easing into a second career? Or do you want to work, or do you want to trade full time? Maybe you're younger and you just want to work for yourself and give this a chance. My advice to you is you can't trade scared. You can't say, oh, I got to make the rent this month, so I need to make $5,000. If you have that mindset when you're trading, it's very hard to be successful because what's happening is you're forcing trades that normally maybe you wouldn't take. These are the pitfalls that you'll encounter if you try to just do it the incorrect way. So my advice to you is to start off small, develop a trade plan. And then once you develop a trade plan and you start small, whether it be in a sim account or whether it be in a real money account, then you can start developing your consistency. Consistency is obviously the key because you want to replace your paycheck with consistent trading returns. And the way to do that is to not hit home runs. Have a process similar to mine where you're basket trading, where you're making small bets and you're hitting singles and doubles every single day. And yeah, occasionally you strike out. That's okay. You know what I mean? But you live to fight another day. That's really what trading is all about. One single trade shouldn't matter in your life. It should be a consistent approach. It should be something that you're doing over and over again that works and that you're constantly trying to improve and you're constantly trying to tweak. Because as the markets evolve and change, you have to evolve and change. I tell my students that all the time. They have to, if you have a certain option strategy that works and that's worked consistently for several months, it might be because volatility is really high right now, or it might be because volatility is low right now, or it might be because the market's in an up or downtrend or whatever. And then all of a sudden the market changes and you're sitting there scratching your head wondering, why doesn't my plan work? It's because the market changed on you and you did not adapt to the new environment. So your plan has to not only be consistent, but it has to be flexible and you have to be humble enough to know when you need to make some changes. And it's not even a matter of being humble sometimes. It's just a matter of having a flexible enough plan to say, okay, if the market does, this is what I'm going to do. If the market does, that's what I'm going to do, and so on and so forth. So once you've developed that, once you have consistency, once you have a plan that's flexible and works for you, and you start seeing some consistent returns, then you could consider doing it full time.